So this is our last official session of Ignite 2.0. Yay. I do want to set us up another time to talk. What is today even? Today is Thursday, right? So what do you guys have in the morning? Because I think it would be really great to do like a little celebration, a morning coffee, and kind of just go over what we feel like we've learned from Ignite and how we can, what our action plans are. So can we do that tomorrow morning at 9? Is everybody good with that?
Yeah.
And then we'll be done with this. And as I was telling Vicki, I have been recording these sessions and putting them on our Market Centers YouTube. There are still some sessions lacking. I've had some challenges uploading some of them, yet they will be completed and all in there. And so that if there's something you want to go back to, if you missed the session, or if you want to freshen up on them, it'll all be there, as well as other playlists for other categories, like how to use some of the tech, how to do command marketing, the app, different walkthroughs and things like that. So we'll always be sharing on that YouTube channel. All right, so today we're talking about financial basics, and I'm really glad they added this to the new Ignite material because it was formerly not in there. So we want to talk about, and we need to know, the average sales price. As you build a baseline in your business, you'll be able to look at your multi-year trend and see your production, and you'll know your personal average sales price. And so that's something that you want to watch, because we know that if your goal is to gross this amount of money, the easier way to get there is by a higher price point, right? So you can always look at that. We know in our area, in our market, it's safe to say $150,000 is the average sales price, okay? So we want to know that for this conversation today. All right, so what do successful agents do every day, guys?
Grow their business and run their business.
There you go. There you go. Again, this is a brand new way to look at things, and I really like how it's very simple. In the run the business, it is to manage your money, okay? So the goal today is to teach you habits to build a financially sound business. We're going to talk about techniques and models used by the most successful real estate agents for managing how each commission check is handled, and how we can use our money to build a bright future for ourselves in real estate. Okay, so we need a little perspective. Think back to the classes you have took and you took to become a licensed real estate agent. Do you remember learning how to handle your finances as an agent? No. But you can calculate PMI, right? So that's not something that has been taught. And so most people don't just know how to do that. And unless you have run a previous small business before the life of being a realtor, you may not have the knowledge. And even people that ran other businesses, it's a lot different because you get paid a lot different, right? So you need to figure out how to put into place best practices so that you can have a financially sound business, right? Because the worst thing to do is to look back on your year and you get your 1099 and you see how much money you made and what you have left. We don't want that to be our story. We want to be very proactive in managing our money. So here's some habits for a financially sound business. So KW, you guys know, is known for model systems, technology, and tools. We offer powerful tools driven by tech that you can pursue in your personal and business goals. Use the proven models and tools of the Millionaire Real Estate Agent to have a smart and sound business. Have you guys ever heard of the little model called the economic model? There are 4 models in the MREA, right? And economic model is one of those models. Okay, so you want to set a profit goal that funds your big life and pursue the activities to achieve it. We did that in one of our earlier sessions where we looked at setting goals matter, right? We looked at what we wanted to accomplish and do with our lives, and then we put a number around that, a big number. And guys, oddly enough, I don't want to say oddly, but coincidentally, Adam and I last night were having this conversation around our own lives. So it's not just applicable to individual agents, and it's not just applicable to individual agents just beginning their journey, right? This is applicable across the board. Okay, so 2, you want to estimate, save for, and pay your taxes on time. Do not fall into the trap or the habit of not preparing for that, right? And then you want to use the proven models and systems of the MREA chart of accounts. And I have not previewed this session, so I'm not sure if it will provide us with that chart of accounts, and I can get you that. Okay, so it's really a tool. Vicki, I'll be sure to share that with you as well so that you can share that with all of your PC clients.
Okay.
And then be fiscally savvy by reviewing your financials monthly. I mentioned earlier that I was on a call and heard Karina Loken of the Loken Group, and they do 2,500 units a year. They have a team of 80 people. They look at it weekly, right? And so you guys are really not to a point though where things are changing weekly, and you need to be looking at it monthly. You need to be looking at what is going in and what is going out and what's the return on every dollar spent. Okay. And right now, let's say you just got your license yesterday, you've already spent an investment of $2,500. Okay. Now you guys are doing bold. That's $99, right? You're already accruing things and you are investing in yourself. What I'm trying to say is whatever you're doing, whether it's training, whether it's education or whatever, you are diving all in. Like, James said, if your plan is not bold, what's your plan? So if you're paying money to take a course, go all out, do the activities, follow the model, follow the framework, because that's how you truly invest. Were any of you guys, I'm kind of going on sidebar, were any of you guys on his call this morning?
I was.
Okay, go back. If you weren't, go back in the Pivot Shift Ahead group, okay, and watch today's call. It's only 15 minutes, I think.
Yes, it was awesome.
It was he got preachy, like, and
yeah.
we needed it, okay, because he was saying, okay, if you are home, and most people on the call are, right, and you are parents and you've got kids at home and you're not in your normal productive environment, right? You need to be there and embrace that time with your family, and you're never going to get that back. Don't let that slip you by, right? Yet, if you are committed to being there for your family, and how you honor that is time blocking to also be committed to your business.
Yes.
So being flexible with your schedule, because sometimes nap time is at this time and sometimes it's at this time, and sometimes you got homework over here. And he talked about even when he was on our business meeting, his daughter popped in, remember that? And she brought him a sheet, and he said, hold on just a second. Like, you're going to have those scenarios. Don't let that slip you by. Yet, if you're truly devoted to your family, you're going to be devoted to your business, because that's what's going to provide the most for your family. So take that
and
time.
It's who you are.
Yeah.
Mm-hmm.
And just be fully committed. So if this is, mom or dad, lead gen time, call time, whatever, you have to have the environment that supports that. So whatever you've got to set up, whoever is going to help, or however that looks for you, it's different for every family, but just make sure that you're all in on those time blocks too, right? And it was really good. So go back and watch that, because I was like, oh, it's just one of those things that struck. Okay, so anyway, pay yourself a salary. Pay yourself a salary. First time I heard that, I was like, pay yourself a salary. We're going to dive deeper into that. Prepare now for financially secure future. So many agents confuse income with profit. They don't save for or pay their taxes on time. They don't make use of the powerful tools available to them. They don't understand their financials and they just wing it. They don't plan for a regular monthly salary, and they are not preparing now for the financial future. And while we don't have time to go through and dive in to every single one of these, we're going to make sure that we cover the fundamentals so that you get off with the right foot. Okay. Now, Gary Keller says, money is good for the good it can do. Have you guys seen that before or heard that he says that? So what is the purpose of business? Trick question. What's the purpose of business? Profit. Profit. And Mike McGalliquitz, something like that, I can't pronounce his last name, Profit First. He wrote that book. I had it on an audiobook. It's really good. But that's the premise of it, right? Is profit is the purpose of business. You don't get in the business to not make money, right? Yeah. So with the profit, you have the money to do what you want to do for the good of your family, for the good of your community. And when you set goals, you become keenly aware of how many transactions you need to close to reach those goals. This is the money you're going to use to fund your big life. Today, we're going to be talking about financially sound business practices that you can incorporate into your business from the start with every transaction you close. This begins with understanding how money that you make from each transaction can contribute to a financially sound or financially unsound business. So it can go either way, right? So, all right, let's look at the difference in financially sound and unsound. We're going to review these two scenarios. These scenarios represent a transaction closed by a solo agent, Jessica Campbell, where she closes on a home and her share of the commission is $9,000. Okay? Is the $9,000 commission check Jessica receives profit or income/revenue?
Income/revenue.
Yes, it's income. The profit is what's left over to fund your business, your taxes, and your lifestyle. It's important to know the difference between income and profit. Okay? What do you use profit for? What do we use profit for? We just said it. To fund the big life. Okay? So here are the two scenarios you can see. The commission she made was $9,000. The check after processing through her company was $5,760. She put $5,760 into her bank account and into her wallet. She did not have any business savings and she did not have any tax savings. Then the other side is commission, the $5,760. It went into a business bank account. Then part of that went into part of it went into business and part of it went to the personal. In the personal, she has a tax savings account, which splits out the federal tax and the self-employment tax. And then into her wallet went $2,419. Does that make sense to everybody?
Mm-hmm.
Do you see why you would do that?
Yes.
In the second scenario, Jessica's saving 40% of her income for taxes. It may be a high number, so you want to check with your CPA. Yet I would rather have more than I'm putting away now, especially if I'm planning. And when we're planning, guys, we're never sacrificing the needs of our family. We're just being wise as how our money and what we're spending, right? And so if we're estimating more and we're paying our taxes quarterly, then it's not going to all catch up with us at the year. And my first year, you guys, I was shocked, because I had not planned. Nobody had said, hey, this is something that you need to do with all these commission checks. I myself treated them all like a check, like a paycheck, right? But if you're running a business, it's not a paycheck, right? Okay, so it's revenue. Most agents, again, what I'm saying with my scenario, most agents receive little or no guidance on how to handle their first or any commission check and end up in the first scenario with no money left over to pay taxes and a life that they still need to fund, right? So how do we how do we set ourselves up so that we don't do this? This is our example here. If you have one transaction and it's a $9,000 commission, and then your check is $57.60, you have $24.19 in your pocket. Do you see the difference there? There is, let me pull up my calculator. $57.60, $24.19. Ooh, I don't know what I just typed, you guys, but it
3301.
It came out some letters.
3301.
So 3301, we'll say $3,300. It's going to what? The
Taxes
savings,
and
expenses, cost of sale. I want you guys to go and look into the MREA, and every one of you guys should have a copy of it. And it's, let me check the page for you. 129. It's the economic model. All right, I want you to spend some time looking into that, because it's got very simply how you're going to use your formulas and look at your business. And the economic model should do three things for you. It's going to show you where your money comes from. That's your gross revenue.
what page was that, Katie?
129. It's going to show you where your money goes. Those are your expenses. And it's going to show you how much is left for you. That's your net income. So on page 129, the top 1, 2, 3, I have it highlighted in mine. And y'all highlight right in, I mean, you see all the, I've got all the tabbies and all kinds of stuff. A lot of the agents will take their book and go get it spiral bound at Office Depot or somewhere. They'll do it, I think, for like $7. Yet you don't have to, right? I'm not telling you to spend money. I'm just saying if you find yourself wearing the binder out, you might want to do that. Anyway, so it's got where you can focus on getting your numbers. So the economic model, you want to be sure that you know that, okay? Anyway, so in the example, she's taking and putting away more than she's putting in her pocket. Yet you need to look at your living expenses, your everything that you have for your household and your family, and write all that out, right? Because you can't be paying yourself a certain amount and not meeting those needs. So you need to take a look at that, okay? And make sure that, and if you're not right now saving 40%, then you build up to that, right? And then we're cutting our expenses everywhere down to the penny. Those little $6.99 subscriptions, those little, you know, this, that, and the other, we're cutting it all down, right? Okay. Ooh, I skipped ahead. All right, MREA models. Look at this. It shows a good example. I jumped ahead. I just jumped right on ahead. Okay, here we go. So the economic model, we know it's on page 129. Here is what it looks like. These are the percentages that come from top agents, all right? And we will be doing exercises in some of our business meetings on, this is what we call the 30-30-40, okay? So you have, the idea is to make sure that you have 40% of everything your business generates be profit, okay? And so the percentages are important as you're building your business and looking at your business, and it helps you adjust and get back on track. Okay, so this is a good model to follow. In the example, it has a $10,000 commission check. So it helps you visualize, okay? So out of that $10,000, $3,000 will go to cost of sales, $3,000 is going to go to operating expenses, and $4,000 goes to profit. Why do you think the model is this, where 40% is a reasonable amount to be left for profit? I'm going to help you guys out. It's to lead with revenue, not expenses. So when you start out in real estate, you may need to spend a little money to get started, but the key to a financially sound business is to only spend the money that is generating for your business and being generated by your business, okay? It shouldn't cost much to generate a buyer and seller for leads if you're working your database every day. The goal in Ignite is to help you realize that by keeping your costs low and working your database, you can generate a tremendous amount of business for very little money to keep that cost of sale down, okay? So now that we talked about these percentages, do you guys feel like you have an understanding of this? And we will dive more into this and more exercises. Be sure that you're reading the MREA, the economic model, so that you can have a better understanding. It's got an exercise in there where you can look at the formula for how many sellers, how many buyers, and what that looks like, so that you can kind of get a good look at what to expect for a cost of sale and expenses. And I do want to say this, y'all, there is a cost to doing business, and it's not just the operating expenses, the monthly dues, okay? So when you are working with a listing with a seller versus a buyer, which one do you think would be a higher cost of sale?
Buyer.
It's the seller, because the buyer, you're just showing them property.
Mhm.
With a seller, you're marketing a property.
Yeah.
So whatever that entails.
I was
thinking
thinking
about,
the
like,
seller.
Yeah, I was thinking about like the gas and
Yeah. Well, it really, you look at the gas and you're doing all the consultations and everything up front, you're going to limit that
gotcha.
a lot more so than to full out market a property. And that can still be really inexpensive. Yet if you look at listing over listing over listing over listing versus buyer over buyer over buyer, even at the highest level where you sharpened your skill and your conversion is really high, you still have a higher cost of sale with a seller. Yeah, we do know we can generate more business there, right? So you just have to always be looking at that and monitoring where your money is, and the reports that KW has as far as looking at your trends, it's really helpful. Yet you have to set a baseline first, and then you'll be able to start monitoring it.
Like, I didn't think about like signs and super boxes.
Yeah, exactly.
Boxes.
So now let's talk about the flow of money in the real estate business. Okay, so what's the goal of our business? Profit, profit, profit. All right, what formula is commonly used to calculate the profit of your business? This is the typical formula, okay? Income minus expenses equals profit. All right. The formula to calculate profit is important, but it's not the model we use to track our profit goals each month, each quarter, and each year. Instead, we ask ourselves the following strategic questions. These questions are also in y'all's participant guide as well, but let's write them down together. Okay, how much money do I want in my bank account at the end of the year? How much money do I want in my bank account at the end of the year? You guys got that one? How many homes do I need to sell to achieve my profit goal? How many homes do I need to sell to achieve my profit goal? How can I minimize my expenses to maximize my net income? How can I minimize my expenses to maximize my net income?
Minimize expenses
to maximize my net income. So this is how we look at profit, okay? Profit, what is our goal? And then income, how many homes do I have to sell? And then your expenses, okay? And where you guys are right now, it's very important that you follow 1, 2, and 3, right? You know
Mhm.
how much you want to make. We can look at and divide out, reverse engineer how many homes do you need to sell to get that. And then we monitor and look at every dollar that we're spending. What is the return on what we're getting to maximize the most amount of money? Do you guys have any questions regarding the flow of money as seen in these models? Does it make sense? Okay.
Mhm.
All right, let's talk about income. So income from your real estate business. The commission earned from closed transactions, there is a listing income, there's a sales income, there's referral income, and there's also leasing income. It can come from just these few sources. Mainly, you'll have listing and sales and some referral income. Leasing also happens sometimes too. And actually, you can get a referral on leasing too. So if somebody says to you, I need X, Y, and Z, and you know that's not your specialty or that's not, something you're an expert in, make it a point to go and connect them with the right person. And it really can take a few phone calls. That can get you additional income. Okay. So referrals is a big opportunity for every agent. And I wish we had more of our agents participate in more of the referral opportunities.
Well, Katie, and that's another thing I want you to put on the list to kind of show us how to go in command and be able to, because I get a lot of people sending me like they want to connect with you,
Mm-hmm.
but I mean, I don't even know really, I don't know how to really work it now. The lady that I'm showing houses to today from Atlanta. Now, I was referred from a Keller Williams agent out of Georgia, and now how she chose me, I don't know, but she chose me, and this lady is having to transfer from the VA there to the VA here. So I really I was playing with it, but I don't even really know how to work
I'll
it.
be happy to do a session with you guys. Just book me on one of y'all's group sessions, Vicki, and we'll do a whole
Okay.
referral conversation.
Okay.
It is
Okay.
a huge opportunity, and
Yeah.
you do not have to spend $1 at all. I mean, like, you have to
Right.
spend no money. You just have to be likable to another agent. It's very easy to tap into. Okay, so we'll definitely do that. Just book me, get on my calendar, Vicki. Just let me know when you guys want to do
Okay.
another one, and we'll do it. Okay.
Okay.
All right. So now let's look
Okay.
at our expenses. Okay. What goes out of your
Mhm.
business? Well, we already talked about it. The answer's on the screen. Expenses go out. Okay. These are costs of sale. We're not thinking about living expenses. We're thinking about cost of sale. It's important to understand the cost of being in business with a market center and in your own business. In the market center, it's company dollar, royalty, and then any referral fees, etc. Okay? So the expenses related to each transaction you make is the cost of sale. Commissions paid to the office are company dollar. Royalty fees paid to KW, that's the franchise, okay? And then commission splits paid to employees or anything, if you have a team, that sort of thing. And then any like referral fees that you're paying. Those are costs of sales. So if you have no transactions, you have no cost of sale, okay? So yet that's not the point, to avoid cost of sale. The point is to understand it and to work with it, okay? The company dollar cap agent's pay is determined by each market center, and our cap is $20,000. The royalty for every individual in Keller Williams is $3,000, okay? And the cost of sale is not only the expenses you have in your real estate business, but also any operating expenses that you have to run your business. Okay, so we talked about some of those marketing things. Let's dig a little bit deeper into it. Okay, so we're going to do a quick exercise. Okay, at the top of the page, we have a formula. Okay, the formulas represent the net commission based on whether or not you've capped on company dollar, royalty, or both. For this example, we are assuming you are on a 70-30 split and you have the 6% royalty and you're not capped. Okay, so I can't fully see the thing. Okay. Here we go. All right, you have not capped on company dollar or royalty. What is the net commission you will receive after cost of sale? Okay, so the formula is the GCI minus the 30% minus the 6% equals your net commission. Okay, so our commission example is going to be $5,000. Let me get a pen. So we have our GCI, $5,000 minus GCI times 30%, $5,000 times 0.30. What is that number?
1,500.
1,500. All right. And then 5,000 times 0.06 equals what?
4,700.
What'd you say it was, Vicki?
It's gonna be 6% of 5,000 is 300, so it's gonna be $4,700
Total for the net commission.
Mm-hmm.
All right, do you see how we got that, guys? You had the original GCI of 5,000. You subtract out the 1,500, which is the 30%. You subtract out the 300, which is the 6%. And your net commission, if you're not capped, is $4,700. Okay. Uh-oh, it's not letting me move forward. All right, so if you've capped on both, what is your net commission?
$5,000.
Okay, if you've capped on royalty, what is your net commission?
35, isn't it? I mean,
No,
no.
you have the 5,000 minus the 1,500.
35.
That can't be right. It's got to be more than the 4,700.
5,000. You
5,000.
said we capped on royalty.
Yes. So 5,000 minus the 1,500, and this is not right then. Okay, let me do a little math. Minus 1,500.
Yeah, that's right, Katie. Because it's
300.
15. All you taking
So
out
that first commission isn't right. The first commission is 3,200. Not 4,700.
Because basically it'll be the 5,000 minus really 36%, which is 3,200.
Right. Yes.
So
So 3,200, right? But if you're capped, it'll just be the 30. So you do the 5,000 divided by the 30%. Is the 3,500. Gotcha. Okay, perfect. I had the first number wrong. So 5,000, you take off just the company dollar, and your commission, if you're capped in royalty, is 3,500. Yet if you are capped on both, your commission is the full $5,000. Does everybody understand that? And that's your net commission. Now, what are we doing with the net commission?
You mean how we need to pay ourselves and
You break it down to the 30, 30.
Yes. Yes. Yes, 30, 30, 40, right?
Mhm.
All right. So let's see what we have next. So here's an activity where you can run through some examples together. We can plan for the future, all right? So we're gonna plan for the future with profit. Everybody has a piece of paper, right? So you can walk through it, okay? Write down your annual net profit goal at the top of your piece of paper. Think about it like this. The net cash I want to have in my bank account at the end of the year is $100,000, okay? And then calculate the gross profit goal you need to make to account for the tax liability in your net profit goal. We recommend estimating what? How much percent for taxes?
30 or
40. Yeah, 30 or 40.
40, right? 40.
For this exercise, we're going to use 40. To calculate that, you divide that profit goal by 60%. Okay? And then you calculate your gross income you need to attain for your gross profit goal. The formula is to take your GCI and take your profit goal and divide it by 40. Okay? That's going to give you your gross income, commission income, okay, that you need to achieve. Does anybody know why we calculate the GCI by dividing the gross profit by 4%, 40%? Because of what model?
Economic.
The economic model. That's right. Okay. So it suggests that if we stick to the operating expenses budget that is equally, if we do the expenses at 30%, we can expect 40% profit. So that's how we use this. Okay. All right. Now we're going to calculate the number of homes that we need to sell to achieve our GCI. The formula is to divide the average GCI by the average commission income, okay? So here, we've got the income, they've got $7,500. Yet ours is around $4,500, $3,300 to $4,500. So do you see what they did there? They took that 416, I cannot read it on my paper. 666 divided by 3,300. Okay, y'all got that?
Katie, for the home sales at 416,000, so is that what your commission check, or is it like just the purchase price of the homes, or?
No, the gross commission income is the commission check you have coming in off of your transactions total.
Okay, gotcha. Okay, and then
so you would need to be bringing through your closings $400,000 to achieve this net profit goal of 100,000, right? Because you have to cut off all, you're doing the expenses, you're doing, the cost of sale, everything is coming out of that larger number to get you your number that you take home, that you profit, okay?
Gotcha. Okay, and 56 homes should yield you or an average of 416,000 or 400,000.
At an average commission of 7,500 is what they've used here.
Okay,
so
gotcha.
Let me see. So 56 times 6 times 7,500. Yes. So they're saying at an average commission of 7,500, that's going to take you 56 homes. Okay. For us, let's see. I'm going to use the tool 4,500, and I'm going to divide it by 416. So that's not right at all. Mm-mm. Okay. 416,666. Divided by 40. All right, so for us, it's 92. Okay, 92. Now we take our cost of sale and apply it. Our cost of sale for the market center is 23,000. That's royalty plus company dollar cap. Okay. Oop. And then our operating expense, how we get that is we reserve 30% of our GCI to cover operating expenses. Therefore, our annual operating expense budget would be this. Oop. Does that make sense to everybody? It's a little, I don't know that I love this exercise on how to get to this because it's a little long, but you want to take your annual profit goal and work backwards to anticipate your taxes and your cost of sale and a reasonable operating expense budget. So for you guys, is it reasonable to say right now you're going to have an operating expense budget of $125,000? No. Yet if you want to net $100,000, this is the path for it. Okay. So if you just need to decide what you want to net, and then you take that and increase it so that you can account for the cost of sale and your expenses. Does that make sense to everybody? That you understand the concept of taking whatever number you want to make and bringing it back. Okay.
Yeah.
So you need to look at your numbers. When you look at the numbers on your paper, your net and your gross profit goal, your GCI, the home sales, what ahas do you have after calculating the numbers for yourself?
Well, with me, when you do it backwards, you know exactly what it is you have to do, how many homes you need to focus on, and it helps you to set your goal,
Mm-hmm.
not stop until you achieve your weekly goals, your monthly goals, and you'll have your annual, but it kind of shows me, if you want this, this is what you have to do.
Yeah, same for me. I think my aha was to aim higher because you really have to aim for the moon to land among the stars a little bit if you think about it.
Right. You've got to go further than, you cannot look at that simple 100,000 because that's not a
Right.
real perspective on earnings versus net.
Yeah.
Right. So
Mhm.
our commission that we receive, it's got to go through all of these processes until we get to our net income. And it's best practice. What we're doing here is best practice. This is not typically what people do, yet this is what the millionaire agents do to estimate their sales. Okay. So let's look at just a couple more best practices here, guys, so that you can gain clarity on what you're doing. All right. And this is not an extensive list, yet it's something that you want to make sure how to set yourself up for success. Okay. So gain clarity on your big life hopes and dreams. Set your personal and business budgets. Set up yourself as a business entity. Okay. That during this whole COVID thing, we saw a really big reason to do that because there were a lot of benefits that came out from the government based on business entities versus independent single contractor agents. You as an independent contracted agent, your only option was to apply for unemployment if you were not set up like a business entity. If you were set up like a business entity, you were eligible for a small business loan. And if you had employees, you were eligible for the paycheck protection. So you always want to be sure to set yourself up financially like a business. You want to open additional bank accounts for taxes and other expenses and other savings. And you can do that with your business entity. It'll allow you to open up a business account. We'll get you the MREA chart of accounts. You want to be sure that you purchase or download tax accounting software so you keep up with everything that you spend, all of the expenses. You hire an accountant, a CPA, or an attorney. And Adam recommends that you have a CPA and not just the H&R Block type taxes, because they have to follow suit to do the W-2 regular things, yet their specialty is not 1099 accounting. And in real estate, it changes every year, and there's certain things that you can deduct, certain things that you can't. You want to make sure that you get the most and you can deduct the most amount, right? That's the way you're going to net more money.
Katie,
Go ahead. Go ahead.
Do we have like resources or contacts that or a class or something that helps us with like setting up your business entity, or someone that we partner with?
We had somebody a few months ago that was going to teach something in the Market Center on how to set up a business entity, and yet there weren't enough people that said, hey, I want to attend the class, so they didn't end up having the class. There will be more, and that's part of, Vicki being the PC and everything. We can get you guys a session on one of y'all's group sessions on how to have a CPA come and talk. It's been a challenge to find really someone here in our area that, one, is not too busy to come and kind of explain some things, yet we will make that part of what we're doing. So and then Vicki, you set yourself up as a business entity, so that's something you can kind of give them a little more insight on as well.
Yeah.
The steps of that. It's very important that you do that. And then when you do that, make sure that it's on our books and it's in our files that you have converted to an LLC, because that's how your checks, if that's how you choose, right, will need to come across to the LLC. All right. And then you want to set dates to calculate and pay your estimated taxes. Do a quarterly plan. You can take off, right now you're really setting a baseline, so you don't have an accurate amount of how much you're going to sell. Yet by doing that exercise earlier, you can kind of look at the gross and say, all right, each quarter I'm going to divide that by 4, and each quarter I'm going to put away 40% of what I'm making. And the easiest way to do that is from each check. Okay. And then you want to plan for your future through insurance, savings, and investments. So let me see. Let me go back a little bit. Okay. We need to give ourselves a deadline to complete each task. And so you want to look at this list, this best practices, and say, I'm going to look into this at this point, right? So that it doesn't pass you by. You want to be sure that this is all on your calendar to accomplish. All right. And then there's a who column. So not only when, but who. Each one of these things, who, when, and who. And then what better way can you think of to lead generate and find valuable resources for your financial best practices than calling your sphere, your trusted friends and family, and asking them who they would recommend? Ooh. Now, I want to say this, though. Be really careful about using a friend or family member or somebody that's their additional business, their side business, or whatever. You want, if somebody's going to handle your business financials, it needs to be their job, their one job. It needs to be an expert, okay? So we're all about supporting our family and friends in their different ventures. But right now we have a lot of fly-by-night kind of professionals, and you just want to be sure that it's vetted, whoever you're going to use. Yet it is always great. You don't have to say, oh yeah, your cousin so-and-so, I'm going to use him, but I would love to contact them, because you're spreading that influence. And you can get business and referrals through that. Okay. What are our ahas today? What are we thinking, feeling? What are our action items today?
For me, this is it's funny and weird at the same time. I was just talking to my best friend last night, who is a CPA, and this is her business. This is what she does. She has a business in Mobile, and all she does is does accounting for small businesses. And we were just talking, and I
would
was
she
like,
do a call?
well,
Would she do a call with the group? That'd be awesome.
I'm sure she would.
Oh, yeah.
I'm sure she would. Yeah, so she's a CPA and she's in Mobile, and this is her business. She has the name of her business is, I was just looking at it, Green Balance Accounting, and she does this for small business. Because she was talking to me and she was like, "All right, Carol, we need to go ahead and set your business up. You need to go," because she's been doing this since we've been best friends since we were in 5th grade, and we were roommates in college, and she's been handling my finances forever.
That's awesome.
So she's like, get me a list of everything you need or what questions you have, and get with me later on this week, and we're gonna go over it. So I'm hiring my best friend because this is her business.
I love that. And if she'd be willing to, I don't want to, Vicki, step on your toes, but if she'd be willing to do just a call with you guys to give you kind of some things to look out for, I think that would be amazing. So, see, already.
She will. I'm sure she will. If I can come up, me and Miss Vicki get together with a day and time, and I'll get with her.
That's fantastic, Shakira. Yeah.
Yes.
All right. Other ahas. Let's hear about it.
I think I know Adam brought it up a few times that to run your business like a business, and then I would hear it, but I would kind of say, not, I'm not at that point yet.
Mm-hmm.
But I do think that it is a good time to go ahead and start, because once you get into it, it's something that you should already kind of have already in place. So
yeah, you want to go ahead and set up the framework for where you're going to go. And that's where most people make the mistake of just running forward, building their business, and not ever checking up. So it's kind of hard to shift gears when you're so far into something. Yet you guys right now can build, we talk about foundations all the time, build that foundation of everything, right? This is my big wide goal. This is the big life I want to lead. And here's my net income attached to that. And then here's how many homes I need to sell to do it. And each one I sell, the money's going to go in these buckets. My household expenses are going to be kept and remarginalized as we need to. My business expenses are kept lean and mean, right? We're doing as many free things as we can. We're spending a little money, and every dollar we spend, we're going to gain back tenfold. So you've just got to really get it all lined up right now. Now is the perfect time to do that. All right, who else?
I think my is kind of seeing the roller coaster of finances, where it goes up and down, with your profit and with the expenses, and realizing how to draw a line right in the middle, to where you're not always looking up, trying to climb a big hill, and start cutting some of those expenses.
Yeah, we had when COVID hit and everything happened, and the shift calls started happening every morning with James, who came on our thing. That was the first thing he talked about, was everybody needs to go immediately and cut everything that they don't need. And you're looking at the A, B, C buckets, right? A is, I need this, I got to pay my mortgage, I got to pay my car, everything that you can't negotiate. And then
Right.
B are the things I really want but don't necessarily need. And C are the things I just need to get rid of that I've been too lazy, right? And so you can always turn the B and C things back when things get better, but you don't need to be bleeding out money, because the expenses can really hurt you if you're not watching them. Gary in the MREA says play red light, green light. So with everything we're doing, with us, our personal and our business expenses are very intertwined. So it's really important, Tiffany, like you were saying, to look at it like a business now, immediately. This is your business you're starting, so that you don't get on down the road and it's a little confusing, because it can become a hobby. And I know that you guys on the call, and anybody that's going to go watch this video, it's not a hobby to you because you're devoting your time to it. This is a business that you're building. All right. Vicki, do you have anything you want to add before we wrap up today?
No, what really, just like Gerald was saying, with it being like a roller coaster, but you still have to be disciplined.
That's very good. Discipline
Yeah,
plays a
you
huge
have-
part.
Yeah, you have to be disciplined. And I mean, I think about when we had a career night and you were telling some of the people that were interested, it's you go to school for a short period of time, but you can really make some good money. You just have to be disciplined, because if you make it this month and not next month, but because of what you set your goals, you have to know how to balance it.
Right.
Mhm.
Honestly, if there's a silver lining to this time we're in right now, it is that we're getting to do this, right? So we need to
Mhm.
look at our gifts and our blessings and their personal and their business. And, right beside me here is God Family Business. So we just need to make sure our priorities are in order and we're doing, our activities and all of the things that need to be done. So we're going to wrap up today. I'm going to stop recording.